Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open. I am Shah. Good morning, Ira.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get you the headlines this Friday morning. Global equities rally after Donald Trump softens his stance on trade, says the US may join the Trans-Pacific Partnership, may be able to find a middle ground with China as well. India's retail inflation falls, the headline for the third straight month, but core inflation pressures rise. The government and the Reserve Bank of India are at loggerheads over the new stressed asset rules, with the Finance Ministry fearing that these rules may have unintended consequences. Hero Enterprises and the Dabur Burman family also put in a combined bid for Fortis Healthcare, making it a three-way race for the hospital chain. And all eyes will be on Infosys as the tech giant kicks off the nifty earnings season later today.
It's an interesting turn of events. All seems to be okay with the world, and the markets certainly seem to be shrugging off fears of a trade war or any kind of geopolitical exchange. It's evident in the way the US markets did last night. It's evident in the way how our markets are likely to shape up as well. And well, maybe certain smart traders were willing to take that risk, because we're definitely seeing some long formation in the key benchmark indices, both the Nifty and the Nifty Bank. We've seen the OI build up on the long side. If you just look at the kind of OI on the put strikes as well, that ranges have shifted. For example, the max OI for the April series shifts to the 10,600 call, which is the maximum OI right now, and that seems to be the near-term top that traders seem to be making. On the put side, it's 10,300 from the 10,000 strike as well, whereby the base for the market has been taken up, at least by the traders currently, from 10,000 to 10,300. This is not what the markets will likely do, but more what traders are betting that the markets could do. So there's confidence that now the possibility of a retest of a level sub 10,300 seems to be less likely, and which is why the put formation on the 10,300 strike is very, very active. FIs have been putting in money for the last couple of sessions as well. In yesterday's trade to about 368 crores, not a large number by any stretch of imagination, but there is money coming in. And if the SGX Nifty is to be believed, we'll start off with a marginal positive, but knocking on the doors of 10,500, this seemed a far cry sometime earlier on. In the last 2 or 3 weeks, I don't think anybody anticipated that we'll come back to 10,500 so swiftly with all the geopolitical tension and the trade war tensions. But I think the markets have shrugged off all of those fears very, very severely. There is, of course, a lot to talk about on the macro data front as well, which I'm sure Ira will talk about as well. But I just want to, since we are sticking with the markets first, let me just quickly take you through the 3 or 4 top stocks in news as well, aside of course, the brokerage notes that have come out. So HCL Technologies, a second acquisition in the last 10 days. This one a lot more meatier as well. The stock was very active yesterday. I'm not saying preempting this because the whole market was active, but it just complements the string of pearls strategy that HCL has started doing for the last couple of years. An interesting one is that much larger than what they've done in the recent past. So should be interesting to watch what happens with this one today. Needless to say, clutch of numbers. I mean, from the large cap, of course, Infosys maybe coming out post-market hours, but BEPL or Bhansali Engineering has had a big ride over the last few months. Could be an interesting number to watch out for. And the Rane Group has been very, very active. Auto Components, any which way is very active. Watch out for this one too in the session today. And 2 or 3 names, small names, wherein there has been some interesting fund action and interesting names that have checked in. So Old Bridge Capital Management, Kenneth Andrade's firm, has bought about 2.5 lakh shares of a company called MMP Industries, and Agrotech Foods, where an Equity India Intelligence Fund has bought about 0.6% stake. Watch out, the all of these food companies, Agrotech was active. I think ADF Foods and a couple of others were very, very active yesterday. So this whole space is something you should watch out for. And keep in mind, OMCs, this is the second note in the last 2 days from a global brokerage talking about how things seem to be okay. Goldman Sachs believed the risk reward was in the favor, and I think that's exactly the term that Deutsche Bank is using as well, that this time and price correction seems to make the risk reward favorable for oil marketing companies. Let's wait and watch if there is some foreign money that is starting to come in onto these names. They have a motor on the businesses are well known, etc., etc. Maybe the last 12 months provide a good entry point for global majors. So these are essentially the market related things to watch out for here, but I'm sure the macro is as important.
We'll talk about the macro, but coming up here, we will give you a quick view on IIP and CPI. Those numbers came out late yesterday evening. Other comments on First Word, we will bring you Darshan's view on the third bidder for Fortis Healthcare and how that stacks up against the other bids. Infosys kicks off the fourth quarter earnings season. Agam gives us a peek there, and Neeraj will take us through why Morgan Stanley expects Indian equities to outperform their peers. I'll just start off with a quick view on the CPI and IIP numbers. The headline numbers were exceptional both on the CPI and the IIP front. CPI headline number came off a little bit. It was slightly higher than the 4.1% that the market was expecting, but it was lower than what it was last month, which was about 4.4, just a touch lower. That chart borrowed from Capital Economics actually tells you the story, because while the headline CPI number was lower because fuel inflation was lower, vegetable inflation was lower, core inflation ticked up quite significantly to about 5.3%, highest in many months, actually, I think all the way since 2014. So the question being asked is, are core inflation pressure starting to pick up? The number, as you can see on that chart, it's the white line, has been on the rise a little bit. There are some one-offs that are built into it, which may flatten out. But I think the core question that everyone has asked when it comes to core inflation is that if your aggregate demand is strengthening all the way from a growth of 6.6% in FY18 to an expected growth of 7.4% in FY19, those aggregate demand pressures should start to show up somewhere on inflation, unless our inflation dynamics have changed substantially. As capacity utilization starts to pick up, and it was 74% in the last number that was released by the RBI after the monetary policy, but as capacity utilization begins to pick up, there will be some pricing power that will come into the hands of producers, and hence maybe that could feed into core inflation or not. That debate hasn't been settled, but that number, the ones who are focusing on the headline will say, look, it's still well below the RBI's estimate, which remember was 5.1% for the last quarter of fiscal 18. So it's below that and it's close to the 4% mark. But those who are watching out for inflation pressures, which may build up in the second half, will look at the core number and say, hey, is there some sense that inflation could pick up? That's on the inflation front. The IIP numbers were strong, a touch softer than what they were in the previous month, but strong nevertheless. Manufacturing continues to be strong. Mining was a little bit of a dampener, and that pulled the headline number lower. But if you look at the capital goods numbers, the infrastructure numbers, they're more or less in line with what has been the case for the last few months, and reflective of the building recovery in the economy.
Wouldn't surprise either, right? I mean, I remember some chats that we were having. There is always an outside chance of inflation shooting up midway through the year and then coming off as well. So that is part one. And part two of my question, more importantly, wouldn't it be welcome to have some pricing power at the hands of the producers?
It would be welcome, but then the interest rate hike that follows it should be welcome as well.
Okay, yeah, well, that too.
So it's that.
But could it be that damaging to core inflation if indeed some bit of pricing power comes back? What are your thoughts?
Damaging meaning core inflation will move up, and if core inflation moves up, then the Reserve Bank of India has to respond via an interest rate hike. I know there's this theory doing the rounds in the market that an interest rate hike driven by growth is less damaging, but an interest rate hike driven by supply side inflation, sure, but it is higher costs. Wherever it emerges from, it is higher costs, and those higher costs have a bearing. I mean, maybe not on the equity markets, but on funding costs of companies.
No, what I meant to ask was that is there an anticipation that the uptick in pricing power could lead to such a spike in core inflation that it will prompt some action from the Reserve Bank? I mean,
I think that depends. That remains to be seen. That remains on the strength of the demand in the market, whether consumption demand is strong enough for producers to be able to push those hikes on. That's a judgment call for the producers to make, and which then reflects in the core inflation numbers. No way of telling. But for now, it's, headline inflation is fine, but I think second half inflation, as the bond markets have said, and economists have said as well, needs to be watched. Well,
let's wait and watch. A bunch of people waiting for one hike. Neelkan Mishra saying nothing till 2020, and Indraneel saying a cut in August. So it's
and Sajid Chinoy saying that there is a probability of a hike in the second half of the year. Sajid Chinoy and others. So there are respectable economists on both sides of the debate.
Should be interesting. Anyways, let's wait and watch. Well, what's gotten very interesting is the three-way race for Fortis Healthcare. The Munjal and the Berman families have put together a bid for the hospital chain. This comes at a time when Manipal Health and IHH Healthcare are also keen on acquiring the company. The combined, which is Hero and the Berman combined, is already a shareholder in Fortis, and the stated position is to bail out the company from its current debt problems. Darshan is standing by with the details. Darshan, good morning.
Good morning. So basically, in overnight development, what has happened is that the Berman family, which owns the Dabur company, and the Munjals, which own the Hero Group, they combined have put in an binding offer for Fortis Healthcare. Now, what they have said is their proposal is to invest 1,250 crores via a preferential allotment. Now, this is a two-part process. The first 500 crores will be invested immediately, and post a 3-week due diligence, the balance 750 crores will be put in. Now, this is up to the board of Fortis whether they want to accept it or no. Pricing is at 156 rupees per share, or something or the SEBI formula, and whichever is higher. So the base price that they are offering is 156 rupees per share. Now, what has happened is they already are shareholders in the company. They own close to 3% stake in the company, and that is why they are shareholders. So they believe that they are concerned. There have been past attempts in which they tried to up their stake in Fortis Healthcare, but something or the other went wrong and they were not able to do it, mainly on account of due diligence issues that has happened. Why the bid? Basically, they are shareholders. They are expressing their concerns in terms of what exactly is happening, and they believe that external funding is immediately needed, given that the cash reserves are depleting significantly, debt is there, and the company's financials need a little bit of funding that will happen. What will happen because of this deal? This will make them the largest shareholders of the company, and back of the hand calculations indicate that post the preferential issue, they could have much more stake than even Yes Bank, so they will become the largest shareholders in the company. Now, what are they saying this 1,250 crores will be used for? The first 500 crores that they give will be used only to pay any kind of employee dues or settle the debts that are there on the company, and in return they are asking for 1 board seat for the combined family that they are asking currently. So this is what is on offer. Basically, their appeal to fair shareholders of Fortis is that this should be accepted, given the fact that both the promoters have strong background, and there will not be any structural changes as what happened with Manipal, where the merger happens, and it's a quick resolution that will happen in terms of some of the financial problems that they had. And they're saying that the long-term growth structure for the company remains unchanged at this point of time. So this is what they're proposing. Now, quick comparison, Manipal Health, the revised bid is at 156 rupees per share. IHH, this is a Bloomberg story, so this is not confirmed independently, but they are indicating 160 rupees per share, and the Hero Berman combined is at 156 rupees per share, or whichever is higher. But see, it's very important to note two things. While Manipal and IIH are basically a takeover, the Hero Berman combined is looking at upping their stake in the company. So they are indicating, so I don't know what their rationale is, we'll try to find out, but it could either be, getting into that majority stake shareholding pattern where they could negotiate much better in what could happen. It doesn't seem like a takeover bid, because at a 17 to 18%, they will not have controlling stake. So it seems like either they're looking for something which I don't know what they're looking at, but it seems it's not a takeover. It's basically upping their stake to get a better valuation or a negotiating power, if this is to be assumed.
Well, we'll get to know about it a bit later on in the day. There is a conversation with Sunil Kant Munjal lined up at about 12:30 p.m. today on Bloomberg Quint. Darshan, thanks for putting that into perspective. But it's a 3-way race, or maybe a 2-way race with the third entrant throwing in its hat, but don't quite know which way the rim will be looking at. Anyways, we'll get to know about that later on. Don't know if Fortis really reacts too much to this, but it certainly makes the case very, very interesting. Also, what makes the case very, very interesting on IT side is that the stocks have started to move up just ahead of the big boy Infosys numbers. A lot will be riding on the numbers today, because the tech giant, the question mark will be whether it will set the mood for the IT space, and frankly, whether it has the wherewithal to do that now, because I thought it lost the mantle about a couple of years ago to TCS, Agam. But nevertheless, it's the first IT company, things that they say might be applicable to a lot of verticals within the other businesses as well. What's anticipated here today?
Sure, Neeraj. So it certainly will indicate about the kind of quarter we can expect from the rest of the IT companies. But this particular quarter from Infosys is not going to be about the numbers as much as it's going to be about the outlook. I'll come to the outlook in just a bit. Let me just start off with the expectations. So we're expecting an uptick of around 2% in terms of dollar revenues as well as rupee revenues. And coming down to your EBIT margins, we're expecting a slight uptick at around 24.4%. Now, in terms of profitability, we can expect a substantial decline. Why? This is largely on account of a tax reversal that we've seen in the base quarter, that is the third quarter, after the company signed this deal with the US IRS. But now, like I said, among the most important factors that we are watching out for is when it comes to Infosys, one is the guidance for FY19. Now, the Bloomberg poll indicates that we're expecting the guidance to be anywhere between 5% to 8.5%. The range will be about 200 basis points. And when it comes to margins, we're expecting that to come around anywhere between 23 to 25%. The second and perhaps the more important factor that we will be watching out for is how Salil Parekh lays out the strategy. We won't have too many details on strategy, but we can at least get an indication of all the areas that Salil Parekh intends to focus in. We'll have more clarity on the strategy for Infosys on the 23rd of April. That's 10 days from now. Moving on, among the other factors, of course, we'll be also watching out for commentary from the banking and financial space, as well as whether or not there is an uptick in the manufacturing vertical and whether or not we actually can expect, stability coming in the retail vertical. So these are some of the areas that we can watch out for. On the whole, like I said, it's not going to be as much about the numbers as much as it's going to be about what Salil Parekh has in mind for Infosys and, of course, the FY19 guidance.
All right, Agam, thanks so much for that. You can catch the management of Infosys at 4 p.m. today. CEO Salil Parekh and his top team will be addressing the press, and you can catch it on BloombergQuint.com and across our social handles. Moving on, now the Indian markets have digested higher Fed reserve rates, protectionist waves, oil prices and a bank scandal or two. But it might be finally time for the tide to turn. Morgan Stanley expects India to outperform emerging markets from here on. Neeraj is telling us what that report suggests. Neeraj.
Hey, thanks, Ira. So not so much about what India would do in absolute terms, but in relative terms, and just picking up a couple of things which I thought were interesting out of this note. It came out yesterday. I've borrowed a couple of charts because this seemed interesting to me. They're, of course, saying that India's, the reasons why they believe India will have outperformance on a relative basis to the other markets. India's relative growth likely to accelerate as per Morgan Stanley compared to at least the Asian peers, if not more. Now, here's a couple of very interesting charts. They have put in the rate differential of India versus the US and the relative performance of the Indian markets versus the MSCI markets. Now, slightly confusing, keep in mind, this is the kind of performance that happens of the Indian markets versus MSCI, and this is the rate differential. It's an inverted axis. Keep that at the back of your mind. So what they are saying, since 2000, according to Morgan Stanley, the repo rate versus the Fed rate gap, it's the purple line. Whenever that differential has gone down, whenever that differential has actually underperformed, the markets have underperformed as well. And whenever that differential has stayed stable, the markets did well. Now, there's a divergence that they said happened sometime around 2013, wherein this relationship broke. Curiously, you would always anticipate that when the Indian rates offer a lot higher than what the Fed rates would be offering, you would see money coming into India. But according to Morgan Stanley and the history that they have seen, is when the differential between the two rates narrowed, India's performance relative to the MSCI pack actually did better. And this is the relationship that they've seen, curiously I might add, all the way till 2013, when this relationship broke. Now they are saying that according to them, the possibility is that we've seen that convergence and now we may see a re-establishment of that relationship, wherein the relative performance of India to the MSCI will go up if indeed the rate differential goes or stays stable. And they are using the recent RBI comments, Ira, to say that according to them, the last RBI commentary does suggest that the market would believe that there is no rate hike as of now. As me and Ira discussed earlier, people are split across the board on this, so there is no saying, but Morgan Stanley believes that that will not be the case. So this is part two of their presumption as to why they believe Indian markets relative to MSCI would do well. They've also said that India's beta relative to the world is at a 13-year low. Now, typically, lower beta would mean that the markets will not really go up dramatically, but they are believing that we might be in a world wherein the world at large might not really have high beta and would give comatose returns. And if that is indeed the case, on a relative basis, again, they believe India could outperform. And then, of course, the usual factors that earnings have to come up and they believe earnings will pick up, which will all lead to the markets doing well. And that's the base theme that Morgan Stanley has. But these two were slightly interesting charts that they believe India, that will help India outperform on a relative basis. I just want to remind our viewers that their base case, bull case, and the bear case scenarios for the Sensex, they believe that until December 18 or calendar year 18, the bull case would see the Sensex move up to 41,500. Their base case is 35,700. And they believe that the bear case, if indeed everything goes completely awry, then we might actually go down to the levels of 25,000. Again, remember, this is something that they're saying that India could do on a relative basis compared to the other emerging markets. On absolute terms, they are saying that we might well have a year which doesn't give too many returns.
Right, interesting there. Thanks so much for that, Neeraj. That's all the time we have on First Word today, but lots more lined up on the show. We discussed the outlook for markets as we head into the earnings season with Andrew Holland of Avendus Capital. Alternate strategies. The Petroleum and Natural Gas Regulatory Board has kick-started the 9th round of city gas auctions. We talked to the chairman about that. And can SAIL leverage growing steel demand to strengthen its financial revival? We asked the chairman here on the show. That's coming up after 9:30.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open with us in Bloomberg Quint. Let's take a look as to what the Asian markets are doing. Well, the hangover from US was definitely positive after those worries regarding Syria seems to have eased. So Nikkei is trading with gains of nearly 0.5%. Hang Seng just about flattish in trade, and Shanghai has slipped into the red. No major losses but seen for Shanghai as of now. Let's pull up SGX Nifty. We had a great session in yesterday's trade where we picked up momentum in the last hour of trade. Currently, SGX Nifty is quoting around the levels of of 10,477, which is just about an uptick of nearly 7 to 9 points. But let's tell you what are the cues that we're getting from the futures and options market. And to take us through the same, Agam Vakil joins us on the show. Hi Agam, good morning. Looks like the base is shifting now. It's become quite narrow between 10,300 to 10,600.
Good morning, Navneet. Yes, absolutely. Starting off with how we've seen trade pan out on the futures. With the Nifty, we've seen an increase of open interest, and it's the same for the Nifty Bank as well. We've seen an increase in open interest towards fresh longs, and considering we have seen in advance in both these indices, there are a little bit of longs building in. But there's very little change with the in the India Volatility Index, which continues to hover between 14.5 and 15. And similarly, when it comes to the Nifty put call ratio, that continues to remain around the mark of 1.5. Now, with respect to changes in open interest, a continuation of trend in terms of what we saw a few days ago. 10,300 put and the 400 put is seeing more and more accumulation, and we're looking at a little bit of base formation there around the mark of 10,300. Well, that said, in terms of stocks, IRB Infra enters the F&O band, so expected restricted trade there. And we're also looking at a lot of these IT companies with longs building up. So TCSO longs building up with 7% increase in open interest. And from the mid-cap space, we saw NIT Technologies, which also added another 6.5% in open interest. Of course, that said, we'll also be watching out for Infosys and how trade pans out for Infi, as we move in just before its earnings post-market hours.
Certainly, we'll be watching out for that. I think that's the top draw. Agam, thanks so much for putting that into perspective. So that's essentially the F&O setup. And let's start off with that, because from a trade perspective or from a news perspective, I think IT is the dominant theme. Avinash Gorakshakar, Head of Research at Joindre Capital Services, joins us right now on the show. Ash, morning. Thanks so much for joining in. Would it be prudent to expect something from Infosys? I think the last quarter, they made this stand fairly clear that a lot of things will be put into perspective, and from an organization's perspective only by end of April. Until then, they might not be able to give out any definitive comments as well. Sure, it's the end of the year. Yeah. Maybe they will talk about the guidance for the next year, etc. But would a large portion of the information come in only post-April?
My sense is, Neeraj, I think the markets would obviously look at what kind of strategic roadmap the management comments on, and more importantly, the markets would be looking at a 6 to 8% kind of guidance for FY19, and hopefully margins maintained at between 24 to 25%. I think anything more than that, or a slightly positive commentary on both these fronts, could obviously trigger a kind of up move in Infosys, because to a large extent these numbers have been largely discounted by the markets. So anything in probably some sort of positive commentary from the management on any big deal wins, or whether new accounts have been bagged, I think that would be something the most of the analyst community would like to hear out, because as far as the stock movement is concerned, I think a large part of the guidance expectation has already been factored into the price.
The reason why I'm just saying this is that when they came out with the last quarter numbers, they did mention, and I read it out, as saying that with the new CEO coming, the refresh strategy would be reviewed and concluded by the month of April, and strategic priorities and plans around capital allocation will be articulated and communicated once this exercise is concluded. We're not at the end of April.
Yeah.
I mean, wouldn't it be too much to hope for the company to give out really meaty information? That's my only question.
I would say, Neeraj, probably, this is probably the right point of time where possibly, they could possibly discuss the March numbers and the outlook for the next year. So I think this probably could be, announced partly now and maybe a little later, when some concrete information has to be given out. I think clearly they wouldn't like to miss out an event like this, and rather than just focus on the, on the guidance and, the fourth quarter numbers. So I think something may be announced, and some part of the information could possibly come by end of April.
Well, Infi earnings day is always a big event, Neeraj, and let's see whether they give out any sort of guidance for FY19 or not. I guess that's one of the key metrics that the market will be watching out for. But Avinash, the entire IT pack was very active in yesterday's session. HCL had a stellar run-up of nearly 4%. And this morning, we have news that they've partnered with Action Corp in an all-cash deal of $330 million. What did you make of it?
No, I think definitely positive news, Navneet, and I think the reason most of the IT stocks have been in the limelight is largely because of the fact that the crude prices have started moving up. So whenever we see crude prices moving up, it actually makes the rupee weaker. So to a large extent, the markets were factoring in the fact that this could obviously be positive for most of the IT companies. My sense is I think that was one of the headwinds, and secondly, clearly I think with the kind of news flows we have been hearing on HCL Tech or typically second tier stocks like even Mindtree, my sense is I think the markets are now getting a feel that possibly IT budgets for the current year may be slightly better than last year. And if that happens, obviously you're going to see a lot of re-rating in these companies, because that was the main worry for most of these IT frontline as well as second tier companies, that whether IT budgets in the US could actually see an incremental growth. And this seems to be now getting factored into most of the stock prices.
The other interesting piece of news, Avinash, has to be Fortis.
Yeah.
Now, I don't know if it's a three-way race.
Yeah.
We don't quite know what the intent of the Munjal bid would be like.
Yeah.
But what did you make of the news?
No, I think it's definitely good news, Neeraj. Yesterday's news flow saying that Dabur and the Munjal group wants to pump in about 750 odd crores. So I think this clearly means that they are interested in the company, and obviously, any management puts money on the table, it obviously means either a strategic tie-up or some sort of strategic investment in this company. And clearly, from a investor standpoint of view, if the valuation definitely is much better than the Manipal deal, then obviously it's good for the shareholders of Fortis, because for a long time the markets were getting a feeling that this initial deal was slightly tilted in favor of the Manipals. But I think now with the revised offer plus with 2 more bidders coming in, my sense is in the short term this stock could possibly get a stronger fillip. Finally, who gets the company is a different question, but there could be a little hostile bid, within these 3 bidders.
They being existing shareholders, Neeraj, of 3% clearly shows that they're not happy with the Manipal bid, maybe even after a revised offer.
Yeah, none of them are. Right? Rakesh, for on record, wasn't the happiest any which ways. My only question is whether this means that it is a 3-way race or whether it remains a 2-way race with a third large shareholder upping its bet in order to have a bigger say in what the eventual deal outcome could be. That's the key question mark. But I'm just trying to figure out from a perspective of a viewer who's watching this right now and is a minority shareholder. Avinash, what would you do if you were a minority shareholder currently?
So I think my sense is, as the news flow starts coming out and possibly one could get a better sense as what kind of valuations each of the bidder offers. My sense is I think most of the 3 bidders would obviously like to outbid each other. And this is a prized asset. SRL Diagnostic is again a kind of a very strong diagnostic business which they are in. So obviously, for a long time the markets were looking at this value unlocking. Somehow earlier management issues were not allowing it to make this happen. So I would believe that even a valuation price of around 170 plus could possibly be possible. Finally, I would believe that whoever takes this asset, Neeraj, will get a prized asset, and over the next couple of years can actually ramp it quite significantly, because asset utilization for a long time in this company was quite low.
Well, we'll have to wait and watch who actually wins the race to acquire Fortis Healthcare. But besides that, there are a whole host of other stocks which the market will be keeping an eye on. We'll go across to our research team to find out which are the stocks that are in news. A couple of brokerage notes have come out this morning. One on Tata Motors from Goldman Sachs, where they've laid down their factors as to when will they turn bullish on the company. Well, here's our research team. Good morning to all 3 of you. Shraddha, let me start off with you. Which are the stocks in news?
Navneet, starting off with Reliance Industrial Infra, not a very widely tracked stock, but they reported numbers yesterday. Nothing exciting about the numbers. Revenues were down about 1%, net profit fell about 66%, and EBITDA margins also saw a knock of about nearly 300 basis points. So that's one stock that we're looking out for. Also, HCL Technologies, which has partnered with Sumera Equity to acquire a US-based cloud services company, Actian Corp, and HCL Tech will own about 80% and Sumera will own 20% in the JV that they set up for this acquisition. So that's another name to track. Boeing has signed a partnership with Hindustan Aeronautics and Mahindra Defence, and this is to make fighter jets in India. Premier Explosives is another one that we're watching out for. A French-based defense manufacturer, Nexter, has said that they will jointly manufacture certain BMCS charges with Premier Explosives. So that's a smaller company. Could see a sharper reaction there. And also a couple of names on the back of bulk deals. Agrotech Foods, where Purinju Veliat's equity investment arm EQ India Fund has bought 0.6% stake yesterday. Quality Letco Bruzo Emerging Markets Equity Fund has bought 1.5% stake. This is in addition to 1.7% that they had bought on Wednesday as well. So they were upping their stake there. And MMP Industries, now this is a very small company listed only on NSE, but Kenneth Andrade's Old Bridge Capital Management has bought 2.14 lakh shares yesterday. So I think that's another one that could react sharply.
All right, we'll be watching out for all those stocks when the market opens today. Saloni, what's UBS saying on Indian Hotels?
So UBS maintains their buy rating on Indian Hotels with a target price of 170 rupees, which implies a potential upside of over 28%. Now, they favor Indian Hotels in the hospitality segment due to its favorable locations and also due to its lower competitive segments in which they operate in. They expect their operating margin to improve to 25% from the current 17% in next 3 to 4 years, along with their return on equity to improve by 10% during the same period. Now, the company's management expect average revenue per room to grow in double digits in next 12 to 18 months. Also, they believe that occupancy rate will increase to 72 to 73% from the current 64 to 65% in the next 5 years. Now, Indian Hotels is to follow an asset-light model approach to expand its network business and focus on upgrading their rating on Ginger Hotels brand, which is their economy segment. While the company is also looking to sell some non-core assets, which they will fund their capital expenditure plans or they'll reduce their debt going ahead. And lastly, UBS expects their EBITDA to grow at a CAGR of 18% over FY18 through FY20.
Okay, that's a bullish note coming in on Indian Hotels. But Yatin, has GS turned bullish, or they've laid down the factors to turn bullish in Tata Motors?
They have laid down the factors which will make them turn bullish. Currently, the target price implies a 3% upside, and they are 10% lower than the consensus estimates when it comes to the Tata Motors consolidated earnings. Now, as we know, GL accounts for majority of their revenue, profitability, and valuation. We have Goldman Sachs, which has come out with 6 reasons that will make them believe that from here on Tata Motors could give significant amount of return, and that will make them feel bullish. The first factor is the upcycle in the global luxury car market. We have seen some slowdown coming in, especially in the European market when it comes to the luxury car segment, and they believe that the upcycle there could be one of the factors that will make them bullish. Apart from that, market share and mix revival with the new launches of Range Rover and Range Rover Sports, they have a potential to improve volumes. If that happens, that will be another reason. Also, the third one is the success of launches amid stiffer competition, along with improving the overall product mix. The fourth is the diesel car market, which has been lagging in the European region again. That makes a comeback, and electric vehicles probably take a back seat in terms of the demand. Also, lower capex in new technology and newer products will improve their overall cash flows, and that is also one reason Goldman Sachs believe could trigger an upside in Tata Motors. And finally, the turnaround in the domestic commercial vehicle and the passenger vehicle segment. Of course, in the past few months, we have seen some revival coming in there, but it should translate into cash flows and it should translate into profitability is what Goldman Sachs believe, and that will probably trigger an value unlocking for Tata Motors. So these are the 6 factors. Importantly, majority of them are facing Jaguar Land Rover, but Goldman Sachs believes that if all of these 6 are put together, that will lead to a bull case as far as Tata Motors is concerned.
And I guess the Bloomberg terminal also says majority of the analysts on the street have a buy call on Tata Motors, but still the stock has not been able to perform. Thank you so much, three of you, for taking us through all those stocks. Avinash, I'm going to take that point forward for Tata Motors. Some bit of revivals was seen in terms of only stock price in last week. We've been talking about it as the cheapest Nifty constituent in terms of valuations. March month numbers were pretty good with regard to the sales. If there's anything in the auto pack at current levels, would you like Tata Motors?
Yeah, Navneet, in fact, if one were to look at, the overall outlook, from the global markets, especially US as well as China, I would believe that in the next, say, 3 to 6 months, definitely the outlook for these markets has definitely improved. With a stronger recovery in the US, hopefully Chinese markets also picking up, where Tata Motors roughly gets about 20-21% of its JLR revenues. I would believe that we could see a stronger bounce back in its global kind of revenue pie, and the domestic market, especially for commercial vehicles as well as for passenger cars, has also picked up well. Tata Motors seem to have done well there also. So I think, compared to a relative underperformance compared to a Mahindra or maybe a Maruti, I would believe that yes, Tata Motors definitely looks fairly attractively valued if one were to take the next, say, 12 to 15 months. So I think this is definitely a good price to look at. Obviously, the markets would obviously be also looking at a proper JLR listing, which I think for a long time the markets were anticipating. So, this could be a potential value unlocking kind of trigger, but overall core metrics definitely should show a strong improvement in FY19.
Avinash, this news flow from Bloomberg News on Premier Explosives, it's a small company. But my larger question is, I don't know if you got a chance to look at all the news flow that came in from the Defense Expo, but a lot of joint ventures, a lot of partnerships struck, a lot of very ambitious statements as well. Anything out here in defense which makes you feel that there is a realistic chance that this company could go out and make money? Because until now, and I'm not blaming any company, all of them have a higher capacity expansion plan or have set up capacities because they thought orders will come in. Somehow they haven't come in. Any company out here that you feel would actually make the cut?
I think, Neeraj, yesterday within the defense news flow, I think news announcement came that for fighter jets, HAL as well as Mahindra Aerospace is going to be selected, and I would believe that Hindustan Aeronautics, which got listed recently, I think definitely can be looked upon. I think this is a company which has already built in adequate capacity and has a enviable track record. If you look at the kind of order book as well as the kind of balance sheet strength they enjoy, I would believe that HAL can definitely be looked upon, although this order flow, how quickly it trickles down into their earnings and top line numbers. But definitely I think in terms of the stock price in the near term and in the medium term, I think HAL definitely deserves a second look. And my sense is once the Q1, Q2 numbers for FY19 do come out, the markets would get a sense as how this company is performing. Up till now it was a government company, but now with a small dilution, I would believe that this is one company which can obviously be amongst the top of the pack as compared to a Bharat Electronics.
Okay, that's the view coming in on the defense space, and HAL, remember, that's the recent one to be listed on the bourses. That's Hindustan Aeronautics. But Avinash, the other space which has been in focus amid the rising crude oil prices is the oil marketing companies. Day before yesterday, there was a carnage for all the three of them. But yesterday, oil minister came up and clarified that they've not had any communication. They've not asked the OMCs to absorb any sort of price increase. After that news, there was a recovery seen in all three stocks, but not a major recovery, because there's a lot of short build-up which was seen after some news reports indicated they could be asked. What's the call on the OMCs, considering now that everybody is talking that the oil prices could also touch $80 per barrel?
No, I think clearly, I think news flow came in quite positive. So we saw a good bounce in most of the oil marketing companies. But primarily, as long as crude prices Navneet move up, and if they do cross 75, 76 a dollar a barrel, then I think the operating metrics for all these oil marketing companies could obviously come under pressure. Although they have the propensity to pass through these crude prices, I would believe that the next say 1 or 2 quarters, if crude prices do continue to remain firm, you could possibly find a little bit of margin pressure for most of these companies. I would believe that the upstream companies like an Oil India or ONGC, or for that reason even Reliance, could possibly be looked upon more closely, and where possibly the risk to reward could be much better. I think oil marketing companies could possibly continue to face a little bit of pressure, considering the fact that crude prices are unlikely to come off, at least in the near term.
That's interesting. In the street, as we said, is split right down the middle. Jefferies today, I believe, Goldman Sachs yesterday believed the risk reward was in the favor of oil marketing company investments. Remember, the nature of their clients is a lot different from what the return expectations that certain retail or HNI investors would have as well. So take that with a pinch of salt, or take that into consideration when you look at the notes coming out. The return expectations of a lot of these brokerage houses, because of their clients, a lot different from what an average investor would want. But BPHP IOC remain in focus. Avinash believes upstream is probably a better bet to look at. We're going to be getting the PNGRB chairman in a bit, Avinash. What about the gas companies? Any thoughts here? Do you like anything?
I think within the gas companies, I think this is a very stable kind of business. So IGL as well as MGL, I think both these stocks, Neeraj, can possibly benefit hopefully if prices continue to rise. In fact, in terms of demand, I would believe that the demand for both the auto sector as well as the non-auto sector, I think demand continues to be extremely strong. So I think my sense is we could possibly look at both IGL and MGL. Both these stocks, according to me, are annuity-based run businesses, very strong balance sheets and a very strong customer base. So I think any dip should be used as an opportunity to actually accumulate these stocks.
What did you make of the promoter entity cutting their stake in MGL?
I think, Navneet, this is definitely not a very big negative surprise. I think as long as the operating metrics continue to do well, core demand for gas continues to be strong. I would believe that, clearly this was a strategic sale transfer. I think one shareholder selling and the other getting in. This may not have a very significant impact on the multiple or maybe on the business prospects of the company if one were to look at a longer term scenario. Maybe in the short term, the stock has come under pressure, but longer term, I would believe that these are opportunities where genuine investors should actually make an entry point and look at at least a 2-year horizon, because these are stocks which are already well priced in, but the longer term prospects continue to be good.
Okay, in moments from now, we'll get in our technical experts on board as well. But, I would just want to pull up the chart of TCS on the wall. And this is the RSI chart. And in fact, I'll just go over to this chart and tell you a couple of things. I know we discussed IT right at the start of the conversation with Avinash, but I want to get a technical picture now going in as well. Look at this purple line that you see, or the magenta line, whichever color you see. If you if you can tell me whether it's visible on the screen or no.
It is.
This purple line or this magenta line is the 50-day moving average. Now look at this last 1 year and look at it every time the price of TCS has crossed this 50-day moving average from below. That's the point that I'm trying to make. It's happened here, and then we had a rally on TCS to the tune of whatever 5-7 odd %. It's happened one more time right here, and then there has been a rally to this tune. The third time that it's happened, which was somewhere around between December and January, wherein it traded on the 50-day moving average for a while, but crossed it from below, and then there was a substantial rally as well that happened. Sure, there was a trough after that, but there was a trading rally that had come into place, and that's the question that I'd like to pose to our technical experts as well, because very recently, 2 days ago, TCS has once again made a move, and it's crossed below the 50-day moving average just about a couple of days ago. There has been a bit of a rally already. The question mark only is that what TCS done in the recent past in the last 1 year, which is whenever it's crossed the 50-day moving average from below and it's shown a rally and it's been an extended move, can it happen this time around as well or no? So we've discussed the fundamental aspect with Avinash just a while ago on the IT companies. The question mark to our technical experts, when they will be joining us in just moments from now, would be whether or not this uptick that we're seeing in TCS from a trade perspective, it can last or no. In fact, I'm told Dharmesh Shah, Assistant Vice President for Technical Research at ICICI Securities, is with us on the show. In a moments from now, we'll also get in Shrikant, Chouhan. Dharmesh, thanks so much for joining in. Just before we get your index views, a thought on TCS or the Nifty IT? They have done remarkably well the last couple of days. Is there more in store here?
Good morning. Yeah,
Good morning.
Definitely, I think so. If you remember last time when I come in your show, we has been the positive on the IT sector as a whole. We believe, I think so, the current pullback will continue for some more time. As overall, if you look at the IT index, it has been underperformer since last 2 years. And what we have seen is if you look at most of the frontline stocks, they have been less damage in the price, but more of a time-wise consolidation in last 2 years. So the overall structure, what we feel from the current levels has been that we remain to be positive for the IT as a whole sector, where again I would say the current pullback definitely should head more higher for TCS or for most of these frontline stocks, where we can see a 10% more higher from the current levels. So overall, I think so the price structure wise, definitely if you look at the yesterday volumes, and the delivery mark was around 54% when the stock was up by 4%. So it's clearly indicating, I think so, that there's some big buying, delivery based buying is happening in the stock. So we remain to be positive for the stock, where again a 10 to 15% upside could be expected in most of these frontline IT stocks.
Okay, that's the view coming in on TCS. Let's see actually if there is any sort of follow-on buying which continues on all these large cap IT companies, Infosys, HCL, TCS, all of them in yesterday's session saw substantial gains of between 3.5% to 4.5%. Dharmesh, but what's the call on the index? Yesterday, finally, we were facing so much of resistance around the 50, 100-day moving average, and Nifty closed above that.
Yeah, definitely. I think so. We are heading towards the resistance level. I would say the upper band of the rising channel, which is value is placed in the range of 10,480 to 500. And we should not forget we have seen a good rally from 99.50 to 10,480, almost a 500 points rally, 450. Yeah, about 500 points rally. So definitely, I think so. If you look at the stochastics too, I think so. They are going into the overbought condition of 94. So 2 or 3 day cool off could not be ignored for the market. But key point to highlight in your show in today's overall, if you look in the Nifty, the previous to the current pullback which happens from 99.50 has been in a larger in magnitude terms, which is around 500 points. If you compare with the preceding last two pullbacks which happened in the February and March, where they were around 350 points to 370 points. So the key noticeable thing in the current pullback is that the magnitude of the rally is getting bigger, which again giving us a highlighting or indicating us that the structure overall of the market is getting improved. So we believe, I think so, the current, even if we see some bit of a resistance in the range of 10,450 to 500, we should not be worried for that. I think so we may see some bit of a correction where again Nifty can go back to 10,200, 300 and form a good base formation for the next leg of upside. So overall, I think so the outlook remains to the positive. Buy on dip should be the strategy. Again, I would say that any dip towards 10,200 to 300 should be looked as a buying opportunity and not as a selling opportunity.
Since there's bullishness all around, and we were talking about how IT charts are looking very strong, I think on Bloomberg Edge, our special segment, wherein Jayesh Kelani tells us about a pattern that the terminal is thrown up. Even that is an IT name. Jayesh, I believe that's the IT name on your radar today.
Yes, Neeraj. So I'm watching out for HCL Technologies. That is because yesterday the stock managed to surge 4% on high trading volume, which was nearly 2.5 times the 30-day average volume. But as of yesterday's close, what has happened is the MACD line has given you a buy signal. Let's have a look at how the MACD actually works. It's a momentum indicator and is calculated by using two exponential moving averages of 26 period and 12 period. So the difference between the two gives you the MACD line, and the signal line is a simple moving average of the MACD line itself. So what it does is it helps you to identify where the momentum turns in a particular chart, and how you need to watch out for the buy and sell signals is when the MACD line crosses above the signal line, you go out and buy, and when the MACD line crosses below the signal line, that's where you go out and sell. So essentially, you have to watch out for a crossover between the two lines and the direction in which it crosses over. So that's the last 6-month chart that we have seen for HCL Technologies. You can see that from Jan to up to now, the stock had largely been in range bound from about 900 to 950 or just above that. But yesterday's trade, what has happened is you can see this big spike up over here. With that, the MACD, which is the bottom panel, the blue line has actually crossed above the white line, which gives it a buy signal. And also important to note is that all of this has happened above the zero baseline, which is critical.
Okay, Jayesh, thanks a lot for bringing those details with regard to HCL Technologies. Remember, that's a pattern which Bloomberg Terminal has thrown upon, and we will be watching out for all the IT counters, considering Infosys also comes out with its numbers. Well, we've also got Shrikant Chouhan, Senior Vice President for Technical Research at Kotak Securities, who joins us on the show now. Hi, Shrikant. Good morning to you. Would you be buying the index this morning, Nifty or Bank Nifty?
Good morning, everybody. Yeah, certainly. If we see the market correcting to the support levels of 10,420, 430, because there the market is having a good amount of supports. Market was below these levels and spent a lot of time close to these levels. 50-day simple moving average is also going to support the market. So we are of the view that the way the market has comfortably crossed this level after spending 2 days around these levels, now the market is heading for the next retracement level, which is close to 10,550, 560, and there certainly we have to be cautious. But at this price, at this moment, the way the Bank Nifty has also supported to the broader market, I am of the view that if there is any drop, we should look for taking some long positions with a stop loss at 10,370, and again we can expect 10,550, 560 on the high side. For Bank Nifty also, 24,900 acted as a very good support, and from here we can see the levels of 24,650 or 700 in next maybe 2 or 3 days of time.
Okay, so let's talk about specific stocks, and Shrikant, I'll come to you first for your stock specific ideas for the day.
Neeraj, I would like to go with space where there is a lot of activity and we can expect a lot of activity in next few weeks or months, because there only the flows are like continuously in last 1.5 months. NBFC is the space to look out for and to watch out for, and India Bull Housing Finance, which is currently trading at 1350, is looking excellent on chart. With a stop loss at 1290, 1295, we can look for taking some long position, and we can expect 1370, 1380 on that side. In next few weeks, we are expecting 1440, 1450 achievable. The other stock which we like is Yes Bank, and again, if there is any further more activity in the market, then that should come in safe havens like private banks, and Yes Bank, which is very close to its support area of 310 or 7. There we should look for taking some long position with a target of close to 325 on the high side. So even at current price, opening price, we can look for taking long position in Yes Bank with a stop loss at 307, and we can expect 325.
Okay, so those are the two top calls coming in from Shrikant. Dharmesh, what about you? What are your individual stock strategies for the day?
I think so we go with the more of a positional view for the market, and where we remain to be positive for the market, and where we believe, I think so the mid-cap IT should do good going forward, where in the selection on these mid-cap IT stocks, we remain to be positive for Zensar Technology. I think so the one stock, which if you look at the pattern, as the stock has been trading in the consolidation or more of a consolidation in the range of 990 to 835 on the low end for the 12 weeks. Yesterday we've seen a breakout happening with the volumes of this range. So a range breakout gives us a target of around 1125, keeping a stop loss of 935 with a time frame of 1 month. So we remain positive for the Zensar Technology. Second stock where we is on the NBFC side, where we believe Bajaj Finserv, I think so the one where the stock has finally resolved the breakout of the 6 weeks of consolidation, 6 months of consolidation. It has been trading in the range of 5450 to 4800 for a long time, and has finally given a breakout of 5450 with the volume. So we believe, I think so the breakout level, if you add to 5450 minus 4800, comes to 650, add to the breakout level of 5450, comes to around 6100 for the target for Bajaj Finserv. So we believe, I think so, but it's more of a positional call for a time frame of 6 months. The support to talk for Bajaj Finserv is in the range of 5200, which is what 61% retracement of this whole leg of rally from 4800 to 5400. So we believe, I think so, the stock should outperform, where the Bajaj Finance is, Bajaj Finserv has been the holding company of the Bajaj Finance, and the way the Bajaj Finance pattern has been coming out, we believe, I think so the Bajaj Finserv should also benefit from those holding companies as a holding company. So all I think so the outlook remains to be positive for Bajaj Finserv going forward too.
Okay, we'll watch out for all of these names. Gentlemen, stay on, so much more to talk about. Avinash, what did you make of this announcement in Dish TV yesterday? The stock flared post that, 8.5% higher.
No, I think longer term, I think, you know, the kind of consolidation we are going to see in the DTH sector, I think it obviously will benefit Dish TV. After taking over, you know, Videocon's DTH business, I would believe that, you know, probably FY19 could be a year of consolidation, and post that, you know, the management had earlier gone on record saying that GST would actually benefit significantly as far as its margins are concerned. So I think looking at the kind of penetration and the kind of growth, I would believe that, you know, yes, this is definitely a deep value stock, but one has to exercise a lot of patience. We have seen that quarterly numbers, Neeraj, have not been all that great. I think the markets were not very happy about its profitability record. So obviously, you know, I would definitely be looking at a stronger earnings curve both at the operating and the net profit level, because this business is definitely a long gestation business. So probably, I would enter the stock only when it corrects and probably for a longer term. I mean, in the short term, the stock possibly had this event, at this point of time. But in the near term, I would believe that, there are no earning triggers, especially the fourth quarter, which could actually drive the stock quite significantly.
Well, that management did highlight synergies will start flowing in, I guess, in the upcoming quarters after the merger finally happened between both the players and last month. Remember, it was delayed for almost a year. That's Dish TV. It also moved above its 200-day moving average in yesterday's session. But were you surprised with the move yesterday that at 74 rupees nobody's going to subscribe now?
No, I think, Navneet, again, it was a corporate action. Yesterday, if you observe,
it was because of the SEBI rule. There was a creeping acquisition of 5%.
Exactly. But then, as far as the operating metrics don't change, and the markets obviously love companies which actually show consistent growth in their bottom lines and obviously return on equity. I think this is one company which has actually tested the patience of several fundamental analysts. And I think as far as numbers don't come in, as you rightly mentioned, the merger was awaited for a long time. The market should obviously now look at FY19 consolidated numbers, and if obviously with a bigger run rate in their customer reach, and obviously if you add up both the businesses, I think market would obviously try to look at the June and the September quarter for some sort of better visibility on the earnings front.
Okay, that's about Dish TV. We'll be watching out for that one. Remember, the open offer is for 3,700 crore rupees, and that's what the promoters of Dish TV are willing to pump into the company. And we'll see actually if the open offer goes through or not. It's at 74. Yesterday's closing price was somewhere about 80 rupees. And we've just seconds away from the pre-opening rates. Those are the Asian bourses, indices, pardon me, on the screen. Nikkei is still showing a positive tick. Hang Seng Shanghai in the red. SGX Nifty just about indicating flat opening for our markets. 10,473 is the level, and the pre-opening rates will just come up on your screen. 62 points higher for Nifty, and Sensex also showing an uptick of nearly 240 points. Remember, these rates will settle down. We'll get the final pre-opening rates by 9:08. But let's do a check for a couple of these stocks, and I want to pull up Infi, HCL Technologies. All of these counters were up in yesterday's session. Infosys also comes out with its quarterly numbers. So on back of that, let's see how the opening is. Just about a flat opening for Infosys. Pull up TCS, HCL Technologies as well. Nothing much for TCS as well, and HCL Technologies, that's showing an uptick of nearly 1% in the opening session. Fortis Healthcare is the other one which will be in focus in today's trade after the news flow came in that Hero as well as the Berman family is looking to infuse more capital. Fortis Healthcare is showing an uptick of nearly 1.3% this morning. And besides that, let's pull up Dish TV as well, considering it was up 7 to 8% in yesterday's session. Let's see what's happening in the pre-opening rates. 80.4, still hovering around the same level. In terms of stocks which will be in focus on back of some news, let's just check for MMP Industries, a small cap company where Kenneth Andrade's fund has picked up some stake. Okay, we'll get that rate for you. And besides that, I guess Neeraj, stocks like Quality and Premier Explosive will be in focus after the market opens at 9:15.
Yeah, truly. And just want to pick up what the OMCs are. I'm sure Navneet marked them, but just pull up the oil marketing companies. It's the second large brokerage, now turning bullish. Yesterday, the stocks ended with a bit of a green. And let's see if there is more in store today for BPHP IOC as they start off trade. I'm sure we marked Fortis, but just for the sake of bringing it back to the notice of people, about 1.5%, nothing too dramatic. I'm sure Agrotech would be active. And last but not the least, want to mark the currency and the bond yields as well. Should come up on your screen. The rupee at 65.27, stable. Yesterday was about 65.31. And then let's get the bond yields up 7.5, and again nothing too untoward, just about lying the way it was in trade yesterday. 9:02, let's get in Somit Sarkar, who joins in with the big brokerage calls for the morning. Somit, good morning.
Good morning, Neeraj. On the big brokerage call for the day, we have Deutsche Bank on Indian telecom sector. Now, according to the brokerage, revenue recovery for the sector is underway as consolidation has been done. Now, though the brokerage is expecting industry's revenue to decline by around 9% in financial year 2019, but over a longer period of time, that is from FY18 to FY23, it is expecting the revenue to grow at a compounded annual growth rate of 7%. Now, it is expecting the financial year 2020 revenue market share of Idea Vodafone to be around 37%, while that of Bharti Airtel to be around 36%. And Reliance Jio, it is expecting the company to have a revenue market share of close to 25%. 5%. It is also saying that currently the stock prices of Bharti Airtel and Idea are tracking the trends from the tariff cuts. That means if the tariff have been cut, the stocks have been declining. Now for Bharti Airtel, it has maintained its buy rating but have cut the target price to 475 from 595. It also says that Bharti Airtel will be the main beneficiary of consolidation and it is expecting a turnaround from Bharti Airtel's Africa operation. For Idea Cellular, they have again maintained the buy rating but have cut the target price to 105 from 130, and it says that currently the market is underestimating the merged company's market position after merger. Now it also says that the merged company's revenue and EBITDA is expected to grow at a compounded annual growth rate of 10% and 15% over FY18 to FY20.
All right, Swami, thanks a lot for bringing those big brokerage calls for the day. Just want to pull up a few more stocks in the pre-opening rates. United Breweries is showing an uptick of about 2.5%. And remember, we've also been chatting a lot about Bata India. There was some sudden move that was seen this week for Bata India. And the other consumption stocks from the likes of Titan, Jubilant Foodwork, or be it the leader in the FMCG space, HUL, all of them have been trading around their lifetime high levels. Avinash, I wanted to take your view on Bata. Now, this is a company which has been focusing on premiumization. Do you think going forward we can see further improvement when it comes to the margins, the operating performance of the company?
Yeah, I think FY19 now should be much better, considering the fact that GST is definitely going to benefit a company like Bata, not only from the fact that they are focused more on the premiumization category, but the unorganized market is definitely going to get more shifted towards the organized share market. And my sense is Bata would definitely benefit. Although the previous quarter numbers were not very encouraging in terms of margins, my guess is FY19 should be a lot better. I mean, the fourth quarter may again be a quarter where margins could remain under pressure. But FY19, hopefully the premiumization strategy and the mass product strategy should actually work out well for them.
Shrikant, on the charts, how is Bata India looking?
Yeah, Majid. See, like Bata was somewhere close to some 650, 660 levels in the month of February, when the market fallen badly from the highs of 11,170 to almost 10,270. But after that, we saw a good amount of recovery in the stock, and now the stock is very close to its previous high of 820, 830. So maybe because of that, profit taking is happening, because the run-up is close to 20% from its bottom. And in this market where there is a lot of churning is happening and a lot of cautiousness is there, I think the fresh buying will emerge only if it breaks at 20. But if there is a medium to long term view, I am to say if there is a view more than 3 months, then certainly even at this price it's a buy and hold. Yes, currently it is around 770. A buy at this price. The next level to watch out for is close to 720, 725. There the stock has spent a lot of time, and we can hold on to it with a target of close to 1,000 on the higher side. So it's a buy, but with a medium-term view.
Okay, that's a buy on Bata India from Shrikant's side. The other stock which was quite active yesterday was Havells. That saw a surge of nearly 3% in trade, and that too has been quite active in the recent past. Avinash, yesterday when I was doing my show Ask PQ, there was a query from a viewer which came about, and they asked which is a better bet, Voltas or Havells. Now they've also ventured into AC after buying Lloyd's business.
No, I think if you look at the operating metrics for the third quarter, I think operating margins for actually Havells showed a decent improvement. And as you mentioned, clearly the markets would now be looking at, the kind of acquired brands from Lloyd which they took over. So I think clearly in terms of Voltas or Havells, I think Havells definitely could see a better leg up in terms of the price performance, considering the fact that, Voltas has already outperformed the market quite significantly. And with a, very hot summer, I would believe that Havells would obviously also get the second feel kind of benefit, considering the fact that volumes would definitely pick up in the months of summer. So I would believe that yes, on lower levels, Havells definitely deserves to be looked.
Acquiring Lloyd's business, which was the low margin business, I believe, do you think overall their margins could be suppressed because of that?
I would believe that if the volume growth continues to be positive, Navneet, I would believe that they could at least maintain margins which they have shown in the third quarter. So I would not be surprised that at least they maintain margins if they don't improve the margins. But yes, overall I would believe that the volume growth trajectory is now going to be very important, which actually will help them shore up their margins.
Fairly interesting. Okay, as the first 8 minutes are coming to a close, remember, aluminum stays the buzzword, and that keeps on propelling Hindalco further, so about 1% higher. Titan continues to rise to new highs, so that one is doing well. about 1% higher or likely to do well on open. These are the Nifty 50 rates as the pre-open rates have come to a close, so likely to be the rates at which we will settle down. Adani Enterprises is bouncing off from the kind of levels that it clocked in yesterday, was amongst the top loser, was the top loser, and today seems to be amongst the top gainers at the start of the trading day. Stock Kolatul Limited, volumes are a bit thin, but that stock too seems to be doing okay. Shrikant, what about people who have got an existing long position in a Hindalco? Would you advise staying long?
Neeraj, certainly, because the way the stock moved up from the lows of 200 to almost 232, it's a outperforming kind of rally that we saw in the metal space. Even if we see the overall international flows for this particular commodity, then that also very, very positive. And the way the stock has performed in last 2 years, this is the only stock which has made a new high as compared to Vedanta or Tata Steel. If we take the chart of last 10 years, it means that certainly a lot of people have bought these stocks. Most big people, they must have taken very big interest in this stock, and because of that the stock has shown such kind of rally. Now after correcting also, the stock is again moving back, and it is very close to its 200-day symbol moving average, which is around 240, maybe around those levels. Some profit taking is not ruled out, but I am of the view that it is heading for the levels of minimum 270, 275 based on its current formation. But if we take the view of next 6 months, then I think the stock will cross its previous high, and we may even see the levels of 330, 340, which is the next wave target for the stock. So it's a buy, and if there is any correction, certainly we should look for adding long positions.
Dharmesh, one quick word on Titan. Clocking in new highs every single day.
Yeah, definitely, I think that the consumption story is definitely playing out in most of these stocks, and then Titan has been the outperformer in this whole leg of rally. If you look even in the declines, it has hardly seen any 10 to 12% correction. So we believe, I think so, Titan, I think so, heading towards 10,040 should be the target for the Titan. Keeping a stop loss of around 925, 930 will be a strong support for Titan. So we believe, I think so, Titan overall positive, I think so. But yeah, definitely the stock has already run up ahead of the results, so we may see some bit of a profit booking. But any dip towards 960, 970 should again be looked as a buying opportunity for Titan. So yeah, definitely it's a buy, but buy on dip should be the strategy for Titan.
Okay, a few minutes away from the market open, and let's get you all that you need to know to stay ahead in trade today. Infosys, Rane Brake, Bhansali Engineering Polymers are amongst the companies that will report the numbers today.
Fortis Healthcare has received unsolicited binding offer from Hero Enterprises and Berman family to invest nearly 1,250 crore via preferential allotment.
EQ India Fund buys into Agrotech Foods and Letco Brosua up stake in Quality, while Old Bridge Capital checks into MMP.
Endurance Technologies, Dixon Technologies as well as Gabriel India to meet funds and analysts today.
Ventura initiates coverage on Eris Life Sciences with a target of 1,060 rupees per share, while IIFL raises the price target for Varun Beverages to 750 rupees per share.
And aluminium stocks continue to be in focus as aluminium prices climb another 3% despite selling seen in other base metals. And this morning we're seeing in the pre-opening rates, Hindalco, Nalco, Vedanta, all of them have been showing some positive ticks. Avinash, very quickly a view on these aluminium players because we've seen that rally on back of aluminium prices on LME going up. I'm just worried now that Donald Trump is trying to resolve issues. If the sanction which they've issued on the company called Rusal, if that's removed, do you think there could be a short selling pressure which could come in?
No, there could be a little marginal selling pressure, but I would believe that companies like Vedanta, for example, which have got a very broad-based metal kind of product bouquet, could possibly be less impacted. I think a more direct hit could happen for companies like Nalco or for that reason a Hindalco. But I think overall aluminium prices are likely to remain firm. Obviously, if the sanctions are removed, that could be a sentimental negative in the near term. But my sense is, I think aluminium prices, the way they are unlikely to actually correct quite significantly. So I think probably Vedanta looks a lot better as compared to a Hindalco or an Nalco.
What are you advising your clients to buy? Is it sticking to auto components because that's a theme that you really like, or is it something else?
No, I think, Neeraj, we have been telling our clients to actually get into a lot of rural-based companies. In fact, we like companies like United Phosphorus, PI Industries. Even within the auto pack, we've been telling our clients to look at Mahindra & Mahindra, which we believe could possibly throw a lot of good earnings surprise in the coming 1 or 2 quarters. So I would believe that, the rural theme is going to be a very strong theme, considering that this is a pro-election year, and we could see a lot of spending by the government, and this is one pocket where possibly, hopefully, the monsoon turns out to be good. You could see a lot of re-rating happening across the board.
Okay, so Mahindra & Mahindra is something that you recommend. That's a large cap name. What about a mid cap name, Avinash?
Within the mid cap, names, we like PVC pipe companies, specifically, stocks like Finolex Industries. We believe that, the market for this product is quite significant. And again, government is a large spender. Agri is a big kind of, consumption theme. And now PVC pipes are finding applications in a lot of non-agri purposes, especially, if you look at the CPVC pipe segment. So, companies like Finolex Industries possibly could be a much better bet as compared to an Astral, which actually trades at, a lot of premium valuation. So, Finolex Industries could be looked at.
Okay, just a minute to go. Let's get you the top trading call from our experts. Dharmesh, I'll come to you first. Looking at the pre-opening rates, what would be your top trading call?
Yeah, the top trading call for the day will be the Godrej Industries is the one. I think so the stock seems to giving a breakout of the range of 574, 575. We believe I think the stock should head towards the 590, keeping a stop loss of 567.
Okay, Shrikant, what about you?
Manjit, I would like to go with Indiabulls Housing Finance, which is around 1315 levels, corrected very well to its support area. It was around 1180, from there all the way it went to 1380, which is a good amount of appreciation that we saw. Now it is corrected to support area. So it's a buy at this price with a stop loss at 1290, 1295, and on the high side we can expect 1365, 1370.
Okay, Jaman, thank you so much for taking the time out and being with us today. Avinash, Dharmesh, as well as Shrikant, really appreciate your time. Well, this is how the markets are likely to start off today, or like starting off today, about 1/3% in the green zone, in line with what the SGX Nifty was indicating. The banks too, about 50 odd points higher than Nifty banks, so no big surprises, just about in line with what the estimates were ahead of the market open. The mid caps and the small caps yesterday were underperforming in today's session too. I mean, actually, no, just in line with what the large caps are doing. So yesterday, the small cap index ended in the red. Today, marginally higher in trade. The heat map, I reckon maybe some bit of green overtaking the red. Yes, some bit, but a lot of flat notes at the start of the trading day. Not too many gainers, save for the commodity names which are doing well. So Hindalco and Vedanta, by virtue of the aluminum prices moving up, have continued to rise. So these two names are right here, out here, doing well. And on the losers side, not too much. Maybe a couple of pharma names like Sun and Cipla looking slightly wobbly, but nothing too dramatic. It's a flattish start, but more green than red on the screen. What about specific stocks? 2 or 3 names that I want to highlight based on news or based on the market movement that we've seen in the last couple of days. Firstly, the ones which are coming out with numbers today. So Bhansali Engineering, Rane Brake, as well as Infosys, all 3 of them starting off marginally higher in the session today. That aside, there are stocks which have moved up and stocks which have come out with news. So firstly, sugar stocks marginally higher, but remember, prices have continued to crack. These stocks were amongst the top losers at the mid-cap end of the market. And I think Balrampur Chini continues to grind lower. So no respite really for these names, just marginally higher, the couple of other names. Agrotech, well, Equity Intelligence, which is Purunju Valayat's fund, bought some stake yesterday, and that stock, which was up 5% up yesterday's session as well, has put up another 3.5%. I think Yash Upadhyay found out about the Rakesh Jhunjhunwala upping the stake in his company as well in the quarter gone by. So marquee names checking into this. Watch out for Agrotech Foods. Last but not the least, the future group stocks the last few days have been very, very active, and in today's session too, starting off marginally higher. What are you spotting, Navneet?
Well, Neeraj, it's a positive start for the broader markets itself. Let's pull up the Nifty mid-cap index, which has seen some positive ticks in the opening trade today. The Nifty mid-cap 100 is up nearly 70 points. Let's just pull up the small-cap index also. That's going to give you a better picture of what exactly is happening in the opening session for the broader markets. Also, that's up nearly 0.5% in trade. So good opening there. The VIX has cooled off a bit. I think the India volatility index is down almost 1% in trade, but in terms of sectoral indices, if you look at them, most of them are trading in the green. But pull up Nifty IT, which was the top gainer in yesterday's session, and I guess that is follow-on buying which has been seen. Nifty IT is up almost 50 points, and that's a gain of nearly 0.5% for that. In terms of individual stocks, if you look at them, well, this morning we've pull up stocks like Fortis Healthcare. Remember, that's the one which is in focus after the new offer has come in. So that's indicating a positive tick of nearly 1%. Something like Dish TV, which touched levels of 800 after the open offer news came about. Dish TV seeing a very, very flat opening in today's session. IRB Infra, that's the new counter which is moved into the F&O band. So let's see if there are any moves in back of that. Okay, that's a flat opening for IRB Infra as well. And besides that, stocks like Havells, which were active in yesterday's session, Havells saw gains of nearly 3%. That's showing an uptick of 0.5% this morning. In terms of a couple of other gainers, Indian Hotels is up 2.5%. Remember, this morning we heard Saloni talking about UBS report on Indian Hotels where they are bullish on it. So 2.5% higher for that one. Adani Enterprises, after tumbling 6%, has seen a marginal recovery of 2.5%. And also something like Oberoi Realty, that's also seen gains of nearly 2 to 3% this morning.
Interesting names out there, a lot of them. But on the large cap space, it's got to do with what's happening to the metal names. Those are the ones which are doing well. This company called Zenith Exports, don't quite know, but the last few days it's been moving up about 10%.
The last two trading sessions, it was locked in upper circuit of 20%. I think that circuit limit is revised to 10% now. Yeah,
confess ignorance, but it's been doing very well. And Pidilite continues to move higher, so that's trading at fresh highs. On open is Pidilite Industries, 1.25% higher at 1,018, doing rather okay. Consumption seems to be the story, which has been continuing, but of late it's been metals. Let's talk about all of that and more with a very special guest. Andrew Holland, Chief Executive Officer at Avendus Capital Alternate Strategies, joins us right now on the show. Andrew, good morning, and thanks so much for speaking to us at Bloomberg Quint. This is Neeraj here.
Morning.
What's the stance been, Andrew? The last 7 or 8 days, it's been a bit of a hurried move. We are back to levels and back to daily moves which seem to suggest that trade wars, geopolitical tensions, almost everything else was a thing of the past.
Yeah, I think the markets are seeing a bit of a relief in terms of the fact that Trump has come off his pedestal a little bit and is talking more positively about the China trade. So the markets are now thinking that there's going to be no trade wars. And obviously we go back to the kind of scenario of global growth again, which was possibly under threat. So that's the good news. The bad news in all of this is that commodity prices, including oil, have spiked higher, and that's really not good for India and inflation. So whilst the figures we saw yesterday in terms of the CPI, the underlying message is that the core CPI is actually still rising. And that's a concern for me. And I think, if I think of a higher oil price going forward, then that's going to put constraints on the government in terms of deficit. The borrowings will have to rise, and yields are probably heading higher, and the rupees probably going to depreciate from here. So that's the kind of scenario which we're looking at the moment, which is not so good from a macro viewpoint. But then, we're just entering the earnings season. And I do expect earnings to be quite good for the last quarter, so I think that will keep the momentum, at least in the short term, reasonably positive. But that said, all markets globally, including India, are looking still a bit tired, and I think we're in this kind of trading range in the very short term. So we've seen the upside the first part of this month after kind of two steep falls in February and March. So. Again, it should make us feel a little bit happier, but we're probably kind of done in the very short term.
Andrew, you highlighted you expect a good earnings season. We'll be getting Infosys numbers today, and also if you look at the IT pack, that's been quite active in the last few trading sessions. What sort of expectations do you have from Infosys and from the entire IT pack?
See, I think, we're not expecting huge amounts of growth. I still think that whole IT industry is going through its own transition period. So, I don't expect, great growth, but I think the the fact that valuations got to where they were just gave a bit more of a fillip for them, and obviously with the management changes, say at Infosys, people now feel that the company can move forward again. So not expecting great that we're not going to return to that decade of growth that we saw years and years ago, but at least we'll see some growth from them. But again, I would just want to emphasize here in that it's more of a play now, I think, on the depreciation of the rupee, which will probably hold these stocks or move these stocks higher in the very short term.
Are you guys trying to actively look at bottom-up mid-cap IT names? Because that pack has certainly done a lot better than the large-cap names.
We do like some of the mid-cap names, but it's in terms of our fund, which is mainly looking at the large caps, unfortunately we have to miss out on some of those. But yeah, some of the mid-cap IT has been an area which has done very well, and I think will continue to do very well. So I think that's probably where a lot of investors will continue to focus. Whilst we'll get reasonable results from the big players in IT, I still think we're a few quarters away from them kind of resuming strong growth. So it's going to be the mid-cap plays which probably have the better upside in the very short term.
By the way, look at some auto names. Escorts, for example, has jumped now and is trading very close to the day's highs and life highs for itself, 3% higher. There is strength in Apollo Tyres, the management that we were talking to yesterday, and that stock is nudging the mark of 300 again, trading very close to the new highs for itself. Andrew, I heard you mention that your fund is predominantly looking at large caps. How are you approaching auto then? Are you looking at the listed two-wheeler, four-wheeler, rather than the large cap two-wheeler, four-wheeler names, or are you also looking at suppliers, because that's a fairly large pocket which is benefiting from the auto surge and in a meaningful way, and the stocks are performing as well?
Actually, you're correct. A little bit of both, actually, but very selective, both in the kind of four-wheeler and two-wheelers in terms of who we want to invest in. There's some companies which are continuing to increase market share, have new model introductions, and that's doing very well. And on the two-wheeler side, again, there's I think it's showing now who's becoming the leaders, and those who are focused. Purely on the kind of a few brands within their segments are doing exceptionally well, rather than those which are just introducing newer products which kind of confuse the consumer. So that's what's really happening within the two-wheeler, and of course CVs look as though the cycle's continuing there. So the whole sector, I think, is still looking good, but obviously you have to be very selective. And on the auto parts, it is unfortunately kind of still quite a lot of mid caps there. But for some of the larger caps, you're benefiting from both growth in India and growth offshore as well, in terms of the US and Europe. So like a few of the names there as well.
Well, just want to address the fertilizer pack. There's been a substantial rise that we've seen for most of these stocks. Pull up Madras Fertilizer, that's up nearly 8% in trade. Fact 2 is trading with gains of almost 7.5%. That's fertilizer and chemical Travancore. Besides that, RCF, Deepak, Chambal, you name it, and all of these stocks are buzzing today in the opening trade. RCF is up nearly 4%. Deepak Fertilizer also trading with gains of 2%. So watch out for this space. Andrew, there's a lot of volatility that one has seen, not only for the Indian markets but also for the global markets. And we've seen a lot of news flow which comes from global markets seems to be impacting our markets as well, from the likes of issuing sanctions on a couple of companies in Russia. And we've seen how the aluminum makers like Hindalco, Nalco, you name it, and all of them have seen a sudden surge. And obviously the reason was prices on LME are also rising for that. What's the overall view? Because as a pack, metals has been an outperformer in the last 1 year. Do you see this outperformance continuing in 2018?
Well, actually, if you think about it in two ways. One, if there's a trade war, or any part of a trade war, then this is always good for commodity prices in particular. So it's a bit of a win-win situation, because if there's no trade war, then global growth will continue to be strong, and that will be good for commodity prices. So I think the put option is there in terms of what's happening either with the trade war or the economic growth. So I think metals look good for a further strong run. My worry is obviously if oil prices go towards 80. This is not good news for India. And I think the other thing I just want to add in terms of what could be add to volatility going forward is if you went through the Fed minutes, which were released earlier this week, then the new Fed Chairman Powell is really saying that all of the people, all of the Fed representatives are saying that they expect growth to pick up strongly in the US, and therefore the rate increases might be more than just the 3 that's been indicated. Now, that I think the markets have not really kind of taken into account. And if you look at the 2-year bond yield in the US, it's about 2.4, 2.5% versus a 10-year at 2.8. That's a very small differential for your 2-year and your 10-year. So if that becomes inverted because of higher interest rates, that could spell a bit of problem and volatility for markets. So that's something to watch out for. But I think, again, the market's ignoring, because of what's been happening on the trade front, what's happening with what the Fed said and what the indicators are. So if we're going away from this trade war with China, then interest rates could actually be increased a little bit even more than expected, or more frequently than expected. And I don't think the market's baking that in. So you might have a rerun of February at some point during the next 3 or 4 months.
Well, Andrew, one only hopes that it is not at a pace which takes everybody by surprise in a negative way. A small surprise here and there might still be okay. Just one last point in light of all of that, what do you think happens to bond yields and thereby to the financial names? Because if indeed the pace is quicker, it will have an impact on emerging market yields.
Well, I think this will play out over the next 3 or 4 months, so it's difficult to say when that will happen. But in the very short term, until that does play out, the RBI in their credit policy came out with this Goldilocks type economy for India, where we get strong growth and virtually no inflation, which is surprising to me. But anyway, in the short term, it might play out. But I think the risks are on the upside in terms of inflation than they are on the downside. So therefore, I was a bit surprised at that. So I think, given that you have the monsoons as well still to play out, I thought that was a pretty dovish thing of them to be doing at this point, which has brought bond yields down, as we all know. But they have ticked up, and if I'm correct, then I think bond yields are probably going to tick higher again. Probably towards that kind of 7.6, 7.7 levels.
All right, Andrew, we'll leave it at that note. Appreciate you joining us this morning and taking us through your views on the markets.
Pleasure.
That was Andrew Holland with his views, who does expect the volatility to continue, but he's focusing more on large caps vis-a-vis the mid cap stocks for this year. But I just want to pull up the Nifty ID. I think it slipped into red after seeing that positive tick of nearly 0.5%. Remember, it's been in focus since the last 2 sessions. The Nifty ID is now actually at sessions low, down 0.5%. Can we pull up few constituents? Infosys, HCL, TCS, which are the major heavyweights on this index. Infy is now almost at sessions low, down 0.7%. TCS also off the day's high, still trading in the positive territory. And HCL, which was a star performer in yesterday's session, is down 1.5%, which is telling you there is some profit booking which is kicking in after the gains that we've seen for all the ID players yesterday. Tech Mahindra too showing a downtick of nearly 1.5%. Well, markets are at 10,478, still in the positive territory, up almost 20 points in trade. Bank Nifty is also managing to hold up in the green, so that's 90 points higher, 25,282 for the Bank Nifty. Well, on that note, we'll wrap it up here on this edition, but don't go anywhere. On the other side of the break, the Petroleum and Natural Gas Regulatory Board has kick-started the 9th round of city gas auctions. We talk about it to the chairman, Dinesh Kumar Sarraf, and also whether we'll ask him whether they can leverage growing steel demand to strengthen its financial revival. So stay tuned for that.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. The government has invited bids from city gas permits across 86 new cities in the country. The aim is to nearly double the coverage area of piped gas connections in India. The outcome of the last few auctions have not been very encouraging though, prompting the regulator to revise the bidding norms. But has that been able to revive the interest amongst the bidders? Are there more bidders than what have been in the past? Let's find about all of that from the chairman of the Petroleum and Natural Gas Regulatory Board, Mr. Dinesh Kumar Sarraf. Mr. Sarraf, good morning, and thank you so much for speaking to us at Bloomberg Quint. This is Neeraj here. Just to start off, the number of cities that are on offer, if I can use that term, in this 9th round is a lot more than what we've seen in the past. Why this aggression?
Yeah, the aggression is because of our thinking that natural gas should be used in the country more and more. To put the thing in perspective, natural gas has got a share of 6.2% in our energy basket, and a couple of years back it was 10.4%. It has come down, which is unfortunate. We would like to take it to 15% for several reasons. And the major reasons are that it is more environment friendly, it is more convenient for the consumers. We have our own commitment to COP21 for carbon emission, and more of natural gas can help us towards that as well. It is more economical because the price of natural gas per unit of energy, which is dollar or rupee per MMBTU, is lower than liquids. And also in future, more and more gas would be available globally because the recent discoveries have been of gas and not of oil. So because of all these reasons, we want to push gas as the future
Mr.
fuel.
Sarraf, if I can...
And that's why...
No, Mr. Sarraf, if I can rephrase my question, maybe.
Yeah.
I'm sure there are merits to this case. What I'm just trying to gather is the last few rounds of bids that have happened, we haven't had a response which has even taken up the number of permits on offer. And now the cities offered for bidding are much, much higher. I mean, do you believe that with the revised tariffs, etc., the response to this large offering could be satisfactory?
Yes. It is the question of how we place ourselves in the market. We have to market this. And I can also tell you that these are not cities. We are not targeting cities alone. We are targeting the districts. Which includes the smaller towns and even the villages. And the bidding norms we have revised. We have talked to many market players. There is a lot of enthusiasm. So we take that there would be quite good response to this bidding round.
By when do you expect this bidding process to be complete? And maybe if you can give us a sense of when does the commercialization of the same start as well, Mr. Sarraf?
The bidding has already started yesterday, and it would complete by mid of July, 12th of July to be precise. And we have put an internal target that within 3 months of that's by October, we would be awarding all the districts or the geographical areas as we call. And within 1.5 years of that is by March of 2020, the gas would start flowing to the domestic kitchens from this, as well as to the CNG stations on the roadsides.
You mentioned that you've spoken to market players and you are hopeful that the participation will be a lot more enthusiastic. Have we seen newer players come into the bidding board this time around as opposed to what's been the case in the past?
Yes, you are right. Other than the usual big players, which includes GAIL's subsidiaries and joint ventures, the oil marketing companies, Gujarat Gas, GSPC, Adani's. There are several new market players and the old market players on a smaller scale. They have also shown quite good interest in that, and because of all that, we are enthusiastic about the response which we are likely to get in this.
And you believe that, I mean, and I'm guessing these participants also believe that despite the hike in gas prices, which could make it difficult for industrials or make it slightly more expensive for industrials as a using commodity, there is enough business sense for active bidding to happen for such a large quantum of districts that are on offer.
No, there is no hike in gas price. There is a marginal adjustment which keeps on happening on a half-year by half-year basis, and the price is exactly what it was 2 years back. It came down and then again, I mean, it increased a bit. So there should not be any concern whatsoever on gas price. Even at this price level, the price of gas is far lower than the liquids.
Okay, what's the update on the unified tariff rate proposed earlier, Mr. Sarraf?
Yeah, we are studying the same. We have received the comments of the various entities. We are studying that, and after that we would call a meeting of the all the interested stakeholders, and after that we would decide. It will take a couple of months.
Okay, so but you do expect this decision to come out in the next couple of months?
Yeah, so whatever way we would decide in couple of months.
And hypothetically, if the decision is taken in line with what the proposed rate has been, what do you think is the implied benefit to both, I mean, the gas user and the gas supplier as well? I mean, there is a bit of a dichotomy in terms of opinion about how this would impact the gas supplier. Can you throw some light here, Mr. Sarraf?
Yeah, I need not at this stage answer this hypothetical question, but whatever we do, we would do what is good for the markets, both the gas suppliers, gas producers, as well as the gas consumers. I can assure you that.
Okay. I'll take your word for that. You are also working on the LNG regulations, Mr. Sarraf. Can you take us through what's the update there?
Yeah, we have recently hosted the draft regulation whereby the LNG terminals would need to keep 20% of their capacity for public access. We have sought the comments of the stakeholders for 1 month, and which are, I think, finishing by end of this month. Early next month, we would meet all the stakeholders and then decide.
So, but you do reckon that this public access that you would have provided or you will provide for LNG, I think you mentioned to the tune of 20% would make it a competitive enough fuel for power companies to start using LNG in a meaningful way?
Yeah, what we expect that many customers, industrial customers who want to import their own LNG, they would have access to the LNG terminals. The pipeline access is already available, and we are going to make that also at the same time much more convenient and transparent. So with the end-to-end availability of the infrastructure, we feel that some of the big customers on gas side would be able to carry out their own import for their own captive use.
Okay, we'll leave it at that, Mr. Sarraf. Many thanks for joining us and throwing some light here. Maybe we look forward to talk to you once the process is complete as well. I believe I heard you mention that this process will take about a month and a half, the city gas distribution.
No, I said that by mid of July the bids would close, and by end of October we would finalize all the bids.
Okay, bids will close on the mid of July, so that's about 3 months away, and about 6 months away before the bids are finalized as well. Thanks for putting that in perspective, Mr. Sarraf, and thanks for joining in today.
Absolutely. Yeah, thank you. Thank you.
That's the chairman of PNGRB talking about the bids on offer for city gas distribution. A lot more interest and participation is what he's saying, but a lot more on offer as well. Hitherto, the first graph that we put up for you, which is data compiled by Bloomberg Quint, shows that the past few offerings have not had the best of responses. The turquoise blue line is the interest, the areas that have been awarded versus the areas offered, and you can see the tall bar, the tall yellow bar. That's a substantial amount of districts on offer. Let's see if the quantum of awarded districts also and the bids for them are much higher than what we've seen in the past or no, as a percentage or overall. I think time will tell. By the way, just before we get on to the next management, or the management on the show, just want to mark a couple of names. Future Lifestyle is up about 5%, so really strong move there. Indian Hotels, a couple of brokerage notes which are bullish, and Indian Hotels is racking up the gains about 3.5% higher. And fertilizers by and large seem to be doing really well. Though I think the man of the match, man of the start of the day today has to be Escorts, trading at new highs, 3% higher. It's a stock that's given some amazing gains already and continues to rise and shine. Another 3% on about 1 million shares traded already. Do watch out for Escorts. Okay, the next set of stocks. I mean, we've been talking about what's happening to the commodity names, at least the base metals. Steel stocks not too far behind either. They've actually had a really good time over the last couple of years. Then there's a bit of a lull, but the prices of both flat and long products have been rising. over 15% in the last one quarter. That's great news for the Steel Authority of India, which has just entered into a joint venture with ArcelorMittal to set up an automotive steel plant in India as well. The state-run steel giant has also managed to post a turnaround in the December quarter, reporting a profit after 2.5 years. But with the threat of a global trade war looming, will it throw the recovery off the track? Joining us to talk about the industry dynamics is Sales Chairman, Mr. P.K. Singh. Mr. Singh, good having you. Thanks so much for taking the time out and speaking with us. You know, after a long time, Mr. Singh, when we speak to market players,
thank you,
who hitherto were talking about Tata Steel and JSW as being the large elephants in the room, started talking about SAIL with equal gusto. You've done a few things right, but let's first talk about the impact that you think this talk of a global trade war, which has receded a bit, but if that were to heighten, would have on commodity prices and thereby on the recovery that we're seeing in the steel sector in India as well.
I think the basic problem today we have is the overcapacity of steel making throughout the world. When the half of the steel of 1600 million ton that is being produced in the world, 800 million ton, slightly more than that, is being produced by China, and they have overcapacity also. In fact, we have overcapacities almost in all countries, and China, which is producing more than 800 million tons, has I think 300 to 400 million ton extra capacity they have. So basically what is happening, most of the countries are safeguarding their national interest, so that at least the dumping of steel lower than the cost of production should not happen. And in fact, in our own country also, we had been doing that in the past, and we should continue to doing that in future also. Whatever has happened in US, I think they are trying to safeguard their interest. We have to have a balance also in order to, in the name of the national interest, I think the duty should be rationalized also. But at the same time, a balance has to be maintained.
Is this the reason why SAIL as a company too has embarked upon this capex plan that you have embarked upon? I think if I read the numbers that my analyst Nikki has given me, you will take your capacity much higher than the current one over the course of the next couple of years. The earmark capex is, I think, of 4,000 crores for calendar year 18 as well. What's the rationale here? What are you trying to do? What's the capacity expansion plan that you will have at the end of the next 3 years, if you can throw some light?
Basically, Steel Authority had been producing, our capacity was close to 12 million tons. The current wave of modernization, which is almost complete, the last units which the production have just, the hot trials have started at Bhilai Steel Plant. This will take, our capacity will increase from 12 million ton to nearly 21 million ton. And right now we are through the process of ramping up. This year we are closing our saleable steel production more than 14 million tons. Next year it should touch more than 16 million ton. Next, I think, couple of years, 2 years at the most, 2.5 years, 3 years, we should reach 21 million ton.
So we've seen that progress in your sales volume as well, Mr. Singh, from quarter one. Sorry, yeah, please make your point, sir.
This is in line with the Government of India policy of producing 300 million tons by 2030-31. So our next wave of modernization will should also start in next 5-6 years, and then we should be able to complete by 30-31, so that we further increase our capacities.
Wow, okay, that's slightly far off, Mr. Singh. I want to talk about the slightly near term. It's this capacity expansion that you're talking about is showing in your numbers as well, right? Your sales volumes have moved up from what they were in Q1 FY17 at about 2.8 MT to about 3.8 MT in Q3 FY18. What would the number look like in quarter 4, and do you expect the number to move up significantly in FY19 as the quarters go by?
I think the quarter 4 figures have already come. They are almost touching that, the whatever we have achieved in quarter 3. The further improvement will come, I think, this financial year. In the first quarter itself, you will see some improvement because our new blast furnace at Bhilai steel plant has started. Steel making capacity has also started there at Bhilai steel plant. So significant improvement you will find in the first quarter and the subsequent quarters of this financial year.
Would you put some
and
numbers
the other
on there,
steel plants, we are, I think the plan that we have kept for this year, you should find a growth of nearly 15%.
Wow. Okay. So that would mean that you could end quarter 4 FY19 with arguably sales volumes of 4.6 or 4.75 MT. Would that be a reasonable estimate?
More than 16 million ton, more than 16 million ton.
Sure.
From 14 million ton, safely we can expect it should be more than that.
Okay. One thing is growth, Mr. Singh. The second thing is profitable growth. Last quarter, your investors were certainly enthused because after multiple quarters of having losses, you turned the corner. Is this a sustainable move?
Right. Yeah, there should not be any doubt on that. Because you see, if you just remember last year, our PBT was quite substantial, 4,800. And almost every quarter, our losses were nearly 1,400, 1,500 crores. And achieving a very modest profit in the third quarter. And you will find much better figures in quarter 4. Much better, much better.
And you think that
this trend will continue in subsequent quarter also. This is sustainable. It's not only sustainable, you will find a lot of improvement in the subsequent quarters.
Okay.
Because on one side that our volumes are increasing, and the other side we are trying to reduce our cost of production. A lot of actions we have taken on the value addition side. The semis percentage we are bringing down. All these factors will have a cumulative effect, and you will see a lot of improvement on the profitability in all these subsequent quarters that we will have.
Okay, so if you can tell me some numbers, sir, how many of your plants have turned a bit positive in the year or in the quarter 4 gone by?
Quarter 4, all plants will have PBT, positive PBT. All plants, all 5 steel plants will have positive PBT.
Okay, that's heartening to hear. And if
we have the 5 integrated steel plants, and all will have positive PBT.
Okay, and if I just go back to the comment that you made, that quarter 4, I don't want a specific number because you would be in a silent period, so please don't give me a specific number. But if indeed your quarter 4 profit after tax, as you mentioned, would be significantly better than what you did in quarter 3, which was 65 crores, and if you believe that trajectory to move up in the quarters ahead, I would believe that FY19
some provisions
would be a year of
we are expected
growth.
To provide. Yeah, there should not be any doubt on that. In quarter 3 and quarter 4, quarter 3 we have made a very modest profit of 82 crores PBT. Quarter 4 itself, despite the provisioning we had to make the provisioning for gratuity, which is quite substantial. Then some of the other measures like common cause, the Supreme Court judgment, because of that some provisioning has to be made. Despite that, improvement will come. A lot of improvement will find in quarter 4 itself. And the subsequent quarters will not have this provisioning also.
Which is very heartening to hear, Mr. Singh. You guys have certainly done a lot of things right. I have one last question, sir, and which is about cost pressures.
It has been a really very hard work, and my entire team has worked very hard, and we had projected that. It's not that it has just come just
out of the blue. Yeah, true, completely
agree. In fact, we had a rolling plan for 3 years.
Sure.
Yeah, we had a detailed discussion with the government, with our stakeholders, and we had projected, and it is exactly more or less on the same lines.
Yep, agree. I have one last question, Mr. Singh, and which is on how are cost pressures shaping up in in the Q1 that has started off right now? I mean, are you seeing, due to iron ore prices or otherwise, any kind of pressures on the cost front?
You see, iron ore prices, we are not affected because we have our own iron ore mines. The other producers, they are affected, but basically the prices of the steel, they are more or less dependent on the input prices, and basically it is coal. Coal prices this year, last year has jumped to nearly 30-35%. Whatever price increase we have found in the steel, it is basically mainly because of the coal and iron ore. But we get some advantage on iron ore front, but the other side, being a government setup, our manpower cost is high. So we have to compensate. And in fact, on that front also, our manpower cost significant reduction we have brought in. It has come down from nearly 22% to 16% in 1 year's time. And next year, you will find further reduction on that front. To steel prices, whatever rise you are finding is basically because of the raw material, And it is worldwide. It's not limited to our country only.
True. Okay, Mr. Singh, we'll leave it at that. Thanks so much for such a candid chat. We look forward to talking to you maybe post what will arguably be a really good Q4. We'll look forward to talk to you then. But thanks for taking the time out and joining us today, Mr. Singh.
Right. Thank you. Thank you very much.
That's a very confident management of Steel Authority of India. And it seems to be a reasonably confident market as well, 1/3% in the green for the Nifty and the Sensex. The Nifty bank up about 0.5%. All is well with the world for now. We wrap it up on this leg of Indian Open. Up next is the F&O show. Stay tuned to Bloomberg Play.